Hey, this is Arjun, and I'm the CEO of Doola. Doola is a venture-backed startup that has successfully raised over $13 million from the likes of Y Combinator, HubSpot Ventures, Nexus Venture Partners, Cody Sanchez, Graham Stephan, Sahil Bloom, and more, just to name a few. By the end of this video, I promise you're going to understand how to file taxes for an LLC with no income. And the way we're going to get there is in a few sections. First, we'll cover, is it required to file taxes for an LLC even if you don't have income? We'll then run through tax filing requirements, the benefits of filing taxes, the consequences of not filing taxes, and summarize with the bottom line, as you might have expected, always file your taxes. Without further ado, let's dive in. Just because you're a limited liability company had a year of hibernation doesn't mean it gets a tax break, unfortunately. Even with zero business activity, you might still have to file a federal tax return. It's kind of like getting a gym membership, but never showing up. You still have to pay. Let's start. Is it required to file taxes for an LLC even with no income? It is required to file taxes for an LLC even with no income. This is because the Internal Revenue Service, also known as the IRS, treats LLCs as pass-through entities, which means that the LLC's income is passed through to its owners and reported on their individual tax returns. Even if your LLC had no income during the tax year, you still need to file a tax return to report that fact to the IRS. Next up, what are tax filing requirements for an LLC that didn't generate income? The specific tax requirements and forms you'll need to use are based on how your LLC is treated and classified by the IRS based on ownership. LLCs treated as sole proprietorships. LLCs treated as sole proprietorships are responsible for filing their taxes using either a 1040 Schedule C or a 1040 Schedule C-EZ form. This form is to be included with the individual's personal income tax return and will report any profits or losses from the LLC. The LLC owner must also pay self-employment taxes, which are based on their net earnings from the business. LLCs treated as partnerships. LLCs treated as partnerships file taxes using Form 1065, U.S. Return of Partnership Income, which reports the LLC's income, deductions, gains, and losses to both partners and the IRS. The form must be filed annually by the 15th day of the fourth month after the end of the tax year. It is important to note that each partner will receive a Schedule K-1, Form 1065, that is used to report his or her share of partnership income and deductions on their individual return. LLCs treated as S or C corporations. LLCs treated as S or C corporations file taxes using Form 1120, U.S. Corporation Income Tax Return, which reports items such as total income deductions, gains, and losses to both shareholders and the IRS. Each shareholder receives a Schedule K-1, Form 1120-S, or Form K-1, Form 1120, depending on whether they own an S corporation or a C corporation, respectively. These forms report each shareholder's share of income and deductions from the corporation that is used for filing their individual income tax returns. Tax elections. Tax elections are decisions by businesses to choose how they wish to be taxed under federal law when they have no taxable income in a given time frame. Businesses can decide between being taxed at a corporate rate or electing out of corporate taxation entirely in favor of pass-through taxation, where all profits are then passed directly through to owners' individual returns, rather than being reported separately at corporate levels first. To make this election, businesses will need to use Form 8832, Entity Classification Election, which needs to be filed with the IRS. Federal and state income taxes. Federal and state taxes can also apply to LLCs depending on their type of entity classification and the location within a particular state jurisdiction. All LLCs are obligated to meet their federal tax filing responsibilities regardless of whether there was taxable income for that year or not, although no payment may be due if there were no taxable profits made during that period. This requirement applies even if you opted out of corporate taxation through Form 8832 Entity Classification Election. Disregarded entities. Disregarded entities refer to a type of tax classification for entities, including LLCs, where the business is considered separate from its owners for legal purposes, but not for tax purposes. In other words, the IRS disregards the LLC as a separate taxable entity, and instead, the LLC's income and expenses are reported on the individual tax returns of the owners. This can be done by filing Form 1040 or Form 1040 SR with Schedule C or Schedule F for business income and losses. Another option would be to file Form 1040 NR if the entity is a foreign one. It's important to note that taxpayers may still need to pay self-employment taxes on $0 of net income from business activity. Benefits of filing taxes. Filing taxes may not be the most exciting task on your to-do list, but As an LLC owner, it can bring significant benefits to your business, even if you had no income during the tax year. First and foremost, filing taxes on time can help you avoid hefty penalties and interest charges that can quickly add up, and they hurt your LLC's bottom line. Therefore, keeping up with your tax obligations shows that you are a responsible business owner who takes compliance seriously, which, at the end of the day, can improve your credibility with lenders, improve your credibility with investors, and most importantly, improve your credibility with customers. Filing taxes can also help you take advantage of various deductions and credits available to LLCs, even if your business operated at a loss during the tax year. By keeping accurate records of your expenses and your deduction, you may be able to reduce your overall tax liability and keep more money in your LLC's back pocket. Since it is a legal requirement, filing taxes can help you maintain good standing with the state and with the federal government, which at the end of the day can have long-term benefits for your LLC. Let's run through an example. Some states require LLCs to file annual reports or pay a minimum tax to keep their status active. By staying on top of your tax obligations, you can avoid losing your LLC's legal protections, and you can avoid having to dissolve your entity and start all over again. What are the consequences of not filing taxes? Even if your business had no income, failing to file taxes for your LLC results in a slew of consequences. The IRS can charge your LLC fees for not filing your tax return, which can be a significant financial burden, especially if your business is struggling or just getting started. If you fail to pay your tax bill on time, you may incur penalties and interest charges that can quickly add up and make it challenging for your LLC to get back on track financially. Penalties and interest, both as charges, start accruing the day after your tax return was due, and they can be as much as 5% per month or part of a month for the penalty for failing to file your tax return on time. The maximum penalty is capped at 25% of the unpaid taxes. According to the IRS, if your return was over 60 days late, the minimum failure to file penalty is $435 or 100% of the tax required to be shown on the return, whichever is less. You may also lose the ability to claim deductions or credits associated with past tax years. Some deductions and credits have time limits and must be claimed on a tax return for the year they were incurred. If the LLC fails to file the tax return for that year, it may forfeit its right to claim those deductions or credits in the future. For example, if an LLC incurred a loss in a previous tax year and wants to carry that loss forward to offset future profits, it must file its tax return for that year on time. If it fails to do so, it may lose the ability to carry the loss forward and reduce its tax liability in future years. Failing to file your LLC tax return on time can also have other consequences, such as damaging your business's reputation, hindering its ability to obtain financing, and limiting its opportunities for growth and expansion. Let's wrap up with the bottom line. Always file your taxes. If your LLC made $0 this year, it doesn't mean you get to skip the paperwork. Reporting your LLC's income or lack thereof to the IRS is not only the responsible thing to do, but ultimately it's going to protect your business in the long run. Think of it this way. By filing your taxes on time, you're like the cool kid who turns in their homework early. You get to avoid the stress and the worry of getting penalized by the IRS and focus on what you do best, which is growing your business. Plus, you never know when that little zero on your tax return could turn into a big dollar sign in the future. Whether you're a new LLC just started or you're an established business that just had a slow year, do not be afraid to report that $0 of income to the IRS. Your business will thank you for it. Now, if you need a little help with your bookkeeping or tax filing needs, don't sweat. Doola is here to save the day, quite literally. We can help you stay on top of your business finances and relieve the stress of wondering when or whether or not you need to file taxes to the IRS. Last but not least, let me run through some of the most frequently asked questions we get when it comes to how to file taxes for an LLC that didn't generate income. What happens if I don't file taxes for my LLC? If you don't file taxes for your LLC, you may be subject to penalties and fines from the Internal Revenue Service, also known as the IRS. Additionally, the IRS may revoke your LLC status as a business entity. Therefore, you must stay on top of any taxes owed by your LLC and make sure that they are filed on time each year. Do you need to file a separate LLC tax return? Yes, you need to file a separate LLC tax return. This must be done regardless of whether or not your LLC has earned any income. The purpose of filing an LLC tax return is to report expenses and other deductions associated with operating the business. Even if there is no income for the year, it is still important to file the necessary paperwork with the IRS to remain compliant. Can I have an LLC with no income but expenses? Yes, you can have an LLC with no income but expenses. Actually, this situation is common for businesses that are just getting started and they're working to build up their customer base before they start generating repeatable income and significant sales from their products or from the services they offer. That's a wrap. Hope you enjoyed this video and you understand that you need to file taxes or at least submit a report even for your LLC that didn't generate income during the year. Now, at this point, you might be wondering, hey, are you sure, or what about my business's specific use case? Well, don't sweat. We offer free tax consultations at Doola, and we are more than happy to answer any questions you have about your specific situation. And if you need help filing those taxes, Doola can help too. So head on over to doola.com, schedule a free consultation with us, and we can't wait to chat with you to ensure that you stay 100% compliant. Comment down below if you have any questions, and we can't wait to see you in the next video, and we can't wait to talk to you soon on that free consultation.